G'day and welcome to the Investor Motivation Podcast. My name's Robert Goudie and I'm joined by...
Rach. How you going, Rob?
I'm well, Rach. How are you?
Yeah, good, thank you.
That's a shock. We had a training day in Melbourne last week.
We did, yes.
Yeah. Did we learn anything new?
We always learn something new.
Did we find a new restaurant to go to?
Yes, we did.
Yes, we did.
Yes, we did. Got to support every industry, so sampling restaurants is,
Yeah, part of the fun. So we're in Horsham, Victoria, so we're 3 hours from Melbourne, and when we go down for our training as a team, all the partners and advisors, we head out and find a new restaurant, which was awesome. Was it La Camara in Southgate? It was spot on. Today, this is our business deep dive that we've just kicked off. This is our number four, is it? Number 4?
Yes.
Who are we chatting about today?
LVMH. Sorry.
So
Louis Vuitton.
Louis Vuitton Moët Hennessy.
Yep.
Bit of a croak in the voice.
Sorry.
This is a French-based business.
Yes.
Yes.
Yes, indeed.
So they are French. I'm sure they speak with outrageous accents. So that is a...
Try contain yourself.
Yeah, that is a Monty Python one, so apologies for that. So with our, obviously, the business deep dives where we're looking at this from an investment point of view, people need to remember that this is general advice only.
Absolutely.
Yeah. We don't know anyone's scenario, but if you just want to give it, I suppose, a bit of the brief of what we're doing and what elements we're looking at.
Absolutely. So each time we cover off around 8 fundamentals of the business that we're looking at. So what does the business do? What's their economic moat? Past performance, of course, financial health and balance sheet, dividends, payout ratios. What are the analysts saying as well? Who owns the business, and if there's any news or announcements that have come out.
Cool, fantastic. So obviously, probably the most famous brand for Louis Vuitton would be Louis Vuitton handbags. Would that be a fair call?
I would think so.
Yep.
Yeah, that's where my mind goes straight to every time. So,
yep. Okay.
Yeah.
So this is really it's luxurious prestige brands, and these guys have about 75 prestigious brands.
That's right, yeah.
Louis Vuitton is just one of those. We've got a huge list of all the brands, but it's all the obviously luxury. And these are not spots that I go into.
No, it's not my usual place to hang out. I'm more Target and Kmart orientated, but nonetheless, there's some incredible stuff out there. As you've mentioned, it's more than just handbags. So the bulk of their business, so 49% of it is in fashion and leather goods.
Okay.
They've, of course, got your wine and spirits, perfumes and cosmetics, and watches and jewellery. And they've also got some retail stores around. So if you think of Tiffany & Co. and Sephora, the makeup brand that we're starting to see pop up as well. So
Christian Dior, Givenchy, Fendi, Celine. And there's just so many brands that I've never heard of before. Actually, I noticed that Peloton's here as well. So at some stage they must have bought Peloton. But was it Hublot? So that's that watches part of the business. So it's, spirits and wines is 8%, watches, jewellery 13%, perfumes, cosmetic 9% of the business, and obviously that fashion leather goods, which is half.
Yeah.
Now this is not a small business.
No, not by any means.
No. So they've got about 6,100 stores globally. There is 213,000 employees. The revenue is 86 billion euros and a market cap of 315 billion euros. So this is not small fry by a long shot. So it's economic moat. They're definitely not the only guys out there doing this sort of work.
No, that's right. Excuse me. But so they do have, as we know, a wide economic moat. So meaning that they've got a large competitive advantage because of the prestige brands that they're selling. And they're quite diversified as well with their offering.
Yep.
And they've got huge presence in the US, are their main ones, as well as Asia.
Yep.
So they do have high quality products that aren't easy to replicate.
Yep. And people value the products. They value being seen with the products.
Yeah, exactly.
Yeah, and that's probably where investing into China has been, been a tough space to invest, apart from the last month and a half. But prior to then, owning Alibaba and Tencent, it's been really tough going. So, but we do want, I suppose, exposure to that demographic and the growing middle class in that space. So, Louis Vuitton has been the go-to because, in a lot of the Asian countries, in China, they are. Perhaps in Australia we like to fly under the radar a little bit. We don't like to flaunt wealth, but in other countries that's not the case.
That's right.
They're proud and they get out there and with their Louis Vuitton. And I heard so many stories of, people not being seen with the same handbag twice.
Yeah, I was going to say that. Generally like to change them over a bit.
Yes, wouldn't that be horrendous for them? So, obviously high quality luxury, so they do have a good economic wide moat. Past performance and future performance. So let's kick off with perhaps what happened in the past.
Yeah, so the first half of 2024, they announced their revenue, so it reached 41.7 billion euros.
Right,
Yep.
Fantastic.
So the key sectors where the growth is was your perfumes and cosmetics.
Terrific.
Yeah.
So the past performance and this is looking on average over the last 5 years, that the earnings growth was around 22.5%.
Yep.
So that has been fantastic. And when we're looking at what the physical share price has done, obviously that's what a lot of people watch. Over the last 5 years, the growth return has been over 360%, excluding dividends. Yep. Since inception, obviously now these business dates, a lot of these brands, some of them date back into the 1800s.
Okay, there you go.
But
I thought the 80s,
but in terms of the listed life, so it goes back to 2000. The data I can get, it's been up sevenfold. Your money.
Incredible.
The last 1 year hasn't been great. The last 12 month return is minus 2%, and year to date it's minus 13%. So that perhaps just shows that perhaps spending has slowed up a bit, and the market thinks that tougher, the higher interest rates have taken a toll globally, perhaps.
Yeah.
We did some numbers on what if you invested 10 grand.
10,000.
10 grand 10 years ago. What does that look like?
So the share price 10 years ago was $135.35.
Euros.
Currency conversion.
Yes.
Which equated to 74 shares.
Yep.
So now with the share price around 627, means it'd be worth a bit over $46,000. So,
fantastic. So an exceptional result.
Yeah, incredible.
Yep. And that excludes dividends.
Dividends, yeah.
Future growth, that's where things look a little bit more subdued.
Yes, So the earnings growth rate looking at 6.9%.
Cool. And that's what that is looking at. That's taking into account a lot of the analysts all the analysts out there that work in the investment banks and the stockbroking firms are providing their opinion on what it might do for the coming 3 years, and they take an average on that. And that information can be found within Yahoo Finance. We use Simply Wall Street to help with that as well. So let's move on to the next criteria that we think is exceedingly important. That's the financial health. What does the balance sheet look like, Rach?
Yeah, so strong balance sheet, which is exactly what we want to see. Not surprised with this business that it is that. So their debt to equity ratio is 35.2%, which is in line with what we would want to see.
Great.
Especially for the size of it.
Yep, and the interest coverage ratio, so that's the amount of times that their profit can pay the interest on that debt that they do have, which is 24.3 times, which is well above the at least 4 times is what we're comfortable with.
Yeah.
So the ability to pay their interest and pay debt off is vital. What's next, Rach?
So looking at dividends and payout ratios.
Talk to me of these things.
Dividends have been consistent for LVMH, so people do like that. The last dividend for the interim was around five. I'm going to get the euros right, don't I? 5.50 euros per share.
Cool, excellent.
And will be paid in December. So the dividend, on it is 2.1%.
Cool. So,
Even there.
right, not a huge dividend that they're paying in terms of a yield, but that doesn't really worry us.
Yeah.
But the earnings payout ratio is, for me, in a nice space. Where's that at?
Yeah,
Rach?
so that's at 47%.
Cool.
So, meaning that they're retaining a lot of their earnings
Cool.
and
So,
reinvesting. Yeah.
So for every dollar that they make, they will pay out 47 cents and they will keep 53 cents to reinvest back into the business. That's reinvestment for future growth and so on. So let's now have a look at, we've got other information at the back here around acquisitions and so on, but what do the analysts think at the moment in terms, is it a buy, is it a hold, is it a sell? And we'll look at the September figures there.
Yeah. So most of the analysts that we've seen are viewing as a solid investment, so either as a hold or a buy.
Yep.
So given that it's got the strong financial and market leadership with it, there is some caution, I guess, with the economic, downturn potentially slowing the demand from China, but still they're positive. With its growth.
Fantastic. So the analysts' recommendations, there's 33 analysts for September, 5 are saying it's a strong buy, 16 saying it's a buy, and 11 saying it's a hold. And given that, and we'll leap into this next, it's largely owned by one family group who run the thing. It's not a bad place to put our own money.
Yeah.
The analyst price targets, and again, this is where all the analysts, and there was 33 in September, are giving their opinion on whether it's a buy or a hold and what the valuation is. So the average is, the low point, the most pessimistic analyst is about €445. The most optimistic one is about €1,000. They're currently at, was it 660, I think? And the average is 840. So based on these price targets, it might be seen to be undervalued.
Yeah.
And if there's a correction in the market, it'll be really undervalued.
Yeah.
Who owns the business, Rach? We'd love to look at this point. And as businesses get really big, it's hard for the people running it to own large percentages. But that's not the case here.
No, it's quite interesting when you delve a bit deeper. It's got individual insiders as 0.5%.
Right, not much.
Not much, doesn't exciting, but when we look at how much the family holding, so the family company owns, that's around 47%.
Yep.
And they've got around 63.5% of the voting rights, so they're really in control and they're lots of skin in the game.
Yep. So when you're looking at the the top 25 shareholders on on a report or on one of the systems, we use Simply Wall Street to get this information, that whilst the individual insiders, the people running it may own a small amount, these guys might be in control of the companies that own a lot of it.
Yeah.
And that's the same for Premier Investments, which is Solomon Lew's business. So Solomon Lew owns a great percentage in his own right, but his company owns a bucket load.
Yeah.
Yeah.
Yeah. Can you pronounce the family company name for us, please?
I would not even be so rude and butcher it, even with my pathetic French accent. So I'm not going to bother with that. The key point here is that the people running it own a lot of it, so they're going to put their self-interest and ambitions, to the fore, and that's going to benefit us as long-term investors.
Yeah, and sort of they've got looks like a bit of a transition plan as well in regards to the company structure. The son Frederick is getting lead roles in there as well, so you can see.
Dad Bernard Arnault is obviously still there.
Yeah, no mention of retirement, but there's obviously a succession plan in place, which will mean that they will still control as time goes on.
Yeah, and the chairman CEO Bernard, obviously he's the statesman. He's been driving this. He took control. There are two businesses that merged many years ago, and again, I probably won't even attempt to pronounce some of those names of the merger of the business many years ago. But yeah, he's put himself in a position where he's been the driver. And one thing that he has done very well, which is worth commenting on, is the amount of acquisitions.
Yeah, it's insane. So it started with two companies merging initially in around 87, and then I haven't even got the numbers on how many are involved now.
Yeah, well, there's
so many.
Just in recent years, like Tiffany and Co was acquired. That was back in 2000. There was a bit of a to do there. Off-White, Bulgari, Fendi, DKNY. There's just a big list of acquisitions, and that's part of that reinvesting that we talk about. When we're not often chasing high dividends for our clients. We want high quality businesses that reinvest, that continue to grow their revenue and bottom line, and then ultimately over a longer time frame, that's what will increase the valuation. Yeah,
so these guys are ticking a lot of boxes.
Cool. So for you, Rachel, we've heard about what the analysts think. What does Rachael Todman think? Is it a buy, or is it a hold, or is it a sell, or your thoughts?
Definitely a hold for me, and buying, I'm a little bit, I suppose, pessimistic. So I think I'll just wait for hopefully that correction around the corner, or for a bit of a share price drop in. So.
Yep, fantastic. Yeah. So for me, I'd probably I'm a buy on this one, but am I buying now? The answer to that is no.
Yeah. Same.
So I think it's an amazing business, great balance sheet, great reinvestment, which I love, and ran by people that own a lot of it. So there's an old saying that you should always back self-interest. I think that's more of a political one, but it works beautifully for the world of investing as well. Thanks, Rach. Where can people find you if they're looking?
So TikTok, Instagram, Facebook, so just under Rach Todman. And yourself, Rob?
Yep, TikTok, Instagram, and obviously our YouTube channel, which some may be watching this podcast on YouTube.
Spotify, that's come up there, so we're all over the place.
So YouTube is Investor Motivation, but please check out our website as well. There is courses that we've done there. I did it was probably a 30 video long on beating mortgage stress, on what to do. I did that probably 6-7 years ago. It's probably only now where it's probably more beneficial for people to look at that.
Yeah, absolutely.
But we provide a lot of education. We want to build our clients' knowledge, and that's key to what we do.
Yeah.
Cool. Thanks, Rach. Thanks Rob, for joining. Catch you.
Thanks, guys. See ya.